Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Monday, the 13th of October. It's ironic that at the moment, given the way that the stock market is moving, there aren't that many heroes left. But first up, we do have Altona Energy, where there has been a decent rebound off the floor of a broadening triangle here. The sort of the bear trap move was down to 0.6 pence last month. And since then, we've seen a V-shaped bull flag resting just above the 10-day moving average at 0.86 pence. So that's the end of day close stop loss on the bull argument at the moment. And we expect a push towards the top of the triangle over the next 4 to 6 weeks. If you're cautious on the shares, maybe you'd wait for an end of day close back above the 200-day moving average shown here in black at 1.05 pence. But it does look like there's been enough of a rebound and a bear trap here from below 2013 support at 0.7 pence to trigger a reasonable push to the upside. Obviously, the Ebola situation is very much in focus at the moment, and also related stocks. Bioquell is one of them, the decontamination group. Here we've seen a near vertical spike through former resistance just below 100 pence from July. We've consolidated as well above the 200-day moving average at 115 pence shown here in black, and the shares have so far filled the May gap to the downside. That was quite a severe move earlier in the year. The situation now is that probably one would be using Friday's intraday floor at £1.11 as £1.12 as the end of day close stop loss, as we look for a further upside here with the top of the May rising trend channel at £1.40, a best case scenario over the next 2 to 4 weeks. Finishing up with a stock which has been highly traded over recent sessions, comes in the form of solar oil, and here we have a situation where we were looking for a breakout in terms of a mid-move consolidation, a bull flag, which had been on the daily chart from early last month. That looks like it's breaking towards the downside, at least initially, but there will be some support coming in at the bottom of this gap at 0.7 pence initially, and that could be a place for aggressive bulls to go long, in the hope that the overall push to the upside will resume soon after that. The stop loss on any bottom fishing or pullback fishing, in other words, that we have over the next couple of sessions would be an end of day close back below the 50-day moving average at 0.62 pence. If you don't like the idea of trying to catch a potentially falling knife, you'd wait for an end of day close back above the 10-day moving average at 0.88 pence before going long again. That's it from me. More updates at spreadbetmagazine.com.